I've been getting a lot of like hype from agents. It's like, oh, interest rates are down. Interest rates are going to come down again. And it's not that I don't think that's wrong directionally. Like, I think that is probably likely to happen. Around the world, central banks are going to start doing that. And that's very, very healthy from an asset price perspective. Not going to go into the disbenefits of people that are living on cash and how horrible inflationary monetary policy actually is for well-being. But I do think the real estate markets will bump with that. The question is, are they beating real inflation? And how might that happen? So what's the sentiment of the day? Is it very positive? Is it a buyer's market? Is it a seller's market? Now, what were the actual sales done, right? These agents that sit on top of the owners, they are professional negotiators. I don't want to call them professional bullshitters because they can't be to actually do the business, right? But there's definitely ways of creating fake scarcity. And that is an auction, for example. They want as many emotional buyers going through an auction as possible. On that note, there was a property that sold at auction on the weekend that we looked very closely at, but they refused to do a mold and moisture report for us. So we said, okay, this is not the right house. Very interesting. And one thing to really point out as well, it's become so obvious, not that I necessarily thought about it, but to me, like, why is real estate going up in terms of growth, as they call it? You can ask an agent, in the last 10 years, you've sold that same house 4 times. Why has it gone up in price? And they'll all point to like physical factors. But to me, it's mainly from the money printing, right? You look at how many dollars the Royal Bank of Australia has created in the last 10 years, and you'll see that it maps very closely to the real estate market. But I do now really see the additional kind of driver for growth in Australia in particular is migration. So I ran some numbers recently, and the amount of people that moved to Australia, according to the Australian Bureau of Statistics, like, let's assume that those are correct numbers, is the population of Australia grew by 5%. Now, that speed of growth, obviously it's only a small country, 25, 28 million, is as fast as the fastest growing nations of sub-Saharan Africa. So yes, it's a kind of synthetic growth in that they are, grown adults migrating to the country, and that's not a birth rate necessarily. But that means they need more schools, more hospitals, more roads, and more housing. And so the reason that we found the rental market so difficult to find value is because people are absolutely busting their gut to just rent anything. They'll just take it, right? You get these crazy pictures of people queuing up to see tiny apartments in Sydney to rent. And so much of the mechanics of the real estate market wind me up because it is the symptom of money printing, right? Houses have become a form of money. And so with that in mind, it's like, is a real estate investment a bad investment? Well, I'm not making this reallocation to physical real estate for capital growth. And that also puts me in a strong position, right? I'm making this reallocation because I need shelter. And if it comes at a cost, i.e. this house is a liability and I've got to pay interest on it, if I eventually sell it and I make a break even, in some ways, the fact that I've been able to control my physical space, that is worth it alone for me. Now, there are other people out there that will call themselves real estate investors who would like balk at that concept. Like, what do you mean I'm not going to get capital growth out of my real estate? It's like, well, what is the net yield you're getting on that each year? Okay, well, it's getting squeezed and squeezed and squeezed and squeezed. Like here in Victoria, for example, the land tax has been put up. So if it's an investor-owned property, they've suddenly got to pay land taxes. Primary places of residence aren't included in that. But that trend is going to continue. Higher tax, higher running costs. So landlords are going to get squeezed. Thankfully for me, it's like this is not a capital growth play, as I mentioned.